Hello friends, welcome back. Today we are going to talk about crypto market cycles. This is chapter 11. But as usual, before I get started, I'm not a financial advisor and none of the material presented in this video is an financial advice. So it's only for entertainment and education. So with that, let's get started. So before I talk about the main drivers for the crypto market cycles, I just want to uh, tell you a couple of points about how this market is different from the stock market. So basically, Bitcoin market is different from stock market in number of ways. So the first and foremost is that it is much faster as compared to the traditional stock market. The reason being that Bitcoin and crypto markets, they are open 24 by 7, even on the weekends, as compared to traditional stock markets, which are like closed on the weekends, and also they operate on 9 to 5 and all that. So Bitcoin market moves much faster. It's a worldwide market, and trading keeps going all day, all night, 24 by 7. So that makes it at least 3 to 5 times faster than the traditional stock market. So that's one important point. And another one is it's a free market. It's not regulated and all that. If you want to know more about crypto regulation, so you can watch my other video. I'll put a link in the description. So now let's get started with the main reasons for the market cycles. So first reason is the Bitcoin halving. If you don't know what is Bitcoin halving, you can go and watch the first chapter, Introduction to Bitcoin. Again, the link is in the description. So what is Bitcoin halving? So Bitcoin halving basically is the event when the block rewards of Bitcoin mining gets halved. So the new coins that come into the market, that supply gets reduced by half. So at the moment, the supply is 6.25 Bitcoin every block, which is like 10 minutes. So now that gets halved every 4 years. So it started with 50 Bitcoin per block, and the first halving happened in 2012. Then the second halving happened in 2016. So where the rewards were halved again. So and then the third halving happened in 2020, and the next halving is supposed to happen in 2024, where the Bitcoin block rewards will again get halved to 3.125. So but why does it matter? So it matters uh, because say you can think of it as a demand and supply problem. So there is a certain demand for Bitcoin in the market, and then there is a supply. And where is that supply coming from? The new market, the new Bitcoin that is getting mined. So the miners use expensive hardware, and they have a lot of operational expenses, for example, electricity and real estate and hardware and all that. So they need to cover up their operational expenses. They need to sell Bitcoin, so they sell it on the market. And that is the supply side of it. So now the supply and demand, assuming that the demand stays the same, so and the supply is actually, the new supply is actually reduced. So what happens? So there is an imbalance. So because of that, assuming that the demand is the same and the supply is now reduced, so you can see that there is an imbalance, and it starts a new cycle, and slowly the price starts going up, and then because the price is going up, people start buying it. People again, it starts getting the attention, and all of the people start investing and buying and trading and all that, and that actually leads to higher prices, and then it starts moving. So most of the time in the past, Bitcoin has been moving in a exponential way. So as you can see on the chart, it's this chart, just a little comment on this chart. This is not a linear chart. This is a log chart. So linear chart represents the absolute values of the price, but log chart actually kind of smooths it out, and it cuts a lot of noise. So this chart is actually showing all the movement from the beginning of the Bitcoin and then up to the current point. So you can see that the price starts going up and then it moves kind of exponentially, and it's also called a parabolic move. So Bitcoin moves in kind of a exponential fashion, and then so at certain point when the price movements become kind of unrealistic and unsustainable, so bears kick in and they start pushing the price down. So bulls get exhausted and the market gets bearish and the price starts going down. So Bitcoin goes into a bear market. So historically, it has been around the mid of the cycle. So so the cycle is like 4 years because of the halving, and then the a couple of years Bitcoin moves up. First it moves slowly, then it starts moving very fast. In a few weeks the price kind of goes parabolic and all that, and then the market is unsustainable, the price movements are unsustainable, and it goes into a bearish phase where the price again starts going down. But as you can see from the chart, you will notice that even though the price starts going down and it corrects heavily, it still stays above the previous highs. So you can see, so the cycle, so every cycle has a new high, and then the lows are not that low. It stays, most of the time it has stayed in the past above the previous all-time highs, previous cycle all-time highs. So that is the way it moves. So uh, so this is the way it has been moving, but another point is that it may not be the case going forward. There are again you cannot predict the future, but still it's the way it has been moving, and it may likely continue having those 4-year cycle and all that. So just a little point on that. So this in this cycle a new narrative came up that it's a super cycle. So a super cycle is where the price keeps moving up, and it does not follow the 4-year cycle, but it has not proven true, and the price started going down after a couple of years again. So it started then this cycle started in 2020, and then it moved up significantly, but then it started going down, and now it's 2022 and we are in a bear market. So another point is that the Bitcoin price in the previous cycles, it used to move very the movements were very volatile, and the volatility has been decreasing over the years. It's kind of more stabilized now, but still there are cycles, and it still goes up significantly. But at the same time, you can see that the previous movements, in previous cycles, the Bitcoin price moves, for example, the previous cycle that started in kind of 2016, so and lasted until 2020. So the price actually moved more than 20-30 times. So, but this cycle, the price did not move that much. So the volatility is reducing over time, but that's another reason is because of a lot of adoption, and also the price tag is pretty high. So there is so you may say that there is only that much room for it to move, but then again, who knows, we may go into a super cycle, and the prices may keep going up forever. But that's you to decide whether to believe or not to believe. So next point on the drivers is the crypto adoption. So crypto is getting adopted at a faster rate. There are a lot of people building on top of this in this market, and then the adoption is going up. So that is another driver for it, another driver for the cycle. So, and also the new altcoin narratives that come into market every time. So the recent bull market had a few of them. So started with decentralized finance, DeFi, and then we had NFTs, and also some GameFi, metaverse, and all that. So I'll talk more about each of these in separate videos. But for now, let's keep moving. So the next point, can you time the market? So again, because Bitcoin moves in these 4-year cycles and the crypto market moves in the 4-year cycle, so it may be possible to time the market. But again, time in the market is always more important than timing the market. So if you get in at the right time, so still, even if you don't buy at the right time, you can still make gains, because this is a niche market, and there is a lot of room for growth. And if crypto gets adopted, which it is getting adopted, so there is there is good chance of getting good gains here. So again, the time in the market is more important. But again, so because of this volatility, huge volatility, so Bitcoin moves up like 20 times, 10 times, whatever in each cycle. And then it also in the bear cycle, it also goes down quite significantly. So historically, it has gone down most of the time 80%, 90% or so. But we cannot say that it will keep doing that in the future. So because no one knows the future, so maybe it will stabilize more, it will go down less. So in the current cycle also, Bitcoin is down about 70%. Who knows, it may keep going down, or it may bounce off and start another cycle. So but again, so there are some factors you can consider in this market, and you can maybe try to time. So the short answer to timing the market is yes, it's possible, but the long answer is it's not easy. You need to consider a number of factors. So let's see. So one of the main factors to consider is the Bitcoin dominance. So what exactly is Bitcoin dominance? So it's the market cap of Bitcoin versus the market cap of all the other coins combined. So that's the Bitcoin dominance. So Bitcoin dominance has been going down because in a lot of altcoins are gaining traction. A lot of new altcoins are coming into the market and getting adoption. For example, Ethereum. So I'll show you Bitcoin dominance chart in a moment. Let me switch screens. I'm in my browser now. I have opened CoinGecko, so you can see at the top, dominance, Bitcoin 40%, Ethereum 17%. So you can see, you can click here and you can see the dominance charts, but I actually prefer trading view. So I am in trading view now. So if I go to markets and then crypto and then market cap charts, so I can see there are certain charts for market capitalization. I'm not interested in this one. Let me just scroll down. It's towards the bottom. So total market capitalization, and then we have here total market capitalization dominance. So Bitcoin 42%, Ethereum 18.47%. So the numbers are a little different from CoinGecko, but I believe it's because of it may not be taking all of the coins into consideration, but it may be taking some certain number of coins, maybe top 10 or something. So I'll go down a little bit and convert this chart to all-time chart. So you can see that initially when Bitcoin was launched, so it was the only coin. So the dominance was near 100%, but then in around 2017. You can see it, the Bitcoin dominance fell all of a sudden. The reason is that in 2017, a number of altcoins actually started gaining traction. A number of altcoins were launched, and they took market share away from Bitcoin. So over the long term, Bitcoin dominance keeps going down, but Bitcoin dominance moves in a certain way, and we may be able to predict if the altcoins are going to go up or how they are going to behave. So I'll go back to the slides and show you a few things. So now that we have seen the Bitcoin dominance chart, how to check it, where to find it, I'll just show you quickly how you can maybe predict the market movements based on the Bitcoin dominance chart. So basically what happens is that the altcoin cycles also is based on these factors. So Bitcoin dominance and Bitcoin price. So when the Bitcoin dominance is going up and the Bitcoin price is going up, so Bitcoin is in a bull market, and altcoins, they are not yet there. They are actually slowly bleeding. They are losing value slowly. But when Bitcoin dominance is going up and Bitcoin price is going down, which means that we are in a bear market, and it's not a good sign for the altcoins, and altcoins are almost dead. So there is no hope there. So the next important one is when the Bitcoin dominance is going down but the price is going up. So that means even though the Bitcoin price is going up, the dominance is going down. So altcoins are gaining traction. So if you're paying attention to the chart, it may be an indicator that the alt season is upon us, and it's the alts are going to go parabolic. They are going to move heavily, and there are gains to be made. So this is the way you can probably time the market. This has worked in the past, but again, may not work in the future. No one knows the future. Just another one point, that altcoins, when I say altcoins, so every cycle there are new altcoins, and most of the altcoins that pumped heavily in the previous cycle, they kind of die in the peak of the bear market, and then the new altcoins emerge. So that makes the game trickier, because you cannot just go and buy all the altcoins that pumped in the previous cycle and hope that they will pump again. So new narratives will come up and new altcoins will come up, and they will gain traction, and people tend to buy those new altcoins more rather than the previous ones. So word of caution there. So that's about it. Thanks for watching. Pause for some time and enjoy this meme. Bye for now.